You're tuned into Visions, a business and community affairs program designed to encourage and promote entrepreneurship in Central Alabama.
Thanks for tuning in to another edition of Vision. Cedric Varner. We're excited about our topic and excited about our guest today. Our guest on the program today is Gloria Frazier, and she is a realtor with Keller Williams Realty. Ms. Frazier, thanks for being here with us on the program.
Thank you for having me.
Of course, you know, we've been trying to work this out to get you out here. You're very, very busy, and so we understand.
Well, thank you so much. Thank you for this opportunity.
Well, thank you for coming to be with us. And so one of the things we want to talk about is becoming a homeowner, and you specialize in that, and we want to talk about the market. You gave us some good points that we want to cover today. But one of the things that you do, I want to call it in your practice, but we'll call it your business. One of the things that you do in your business is you do a first-time home buyers seminar.
I do. I do.
So tell us a little bit about it.
Well, it's, you know, a lot of time when I speak to my first-time home buyers, I really love my first-time home buyers. The first thing they say is, Ms. Frazier, I am fearful. I don't know what to do. I don't know where to start. So to inform them, to help them, I have a seminar to educate them about the market, to let them know what to expect. So I'm getting ready to have one of those now within the next month.
Okay.
So it's going to be very informative about down payment assistance programs, home inspection. That's the whole process of the buying process. Because when you're working with a realtor, nothing should really catch you by surprise.
Okay. That's really good. Well, so how long have you been doing these seminars? You've been doing them a while?
I have. But now my goal is to try to do one like at least every 3 months.
Okay.
Because my focus now is first-time home buyers.
That's good.
Yeah.
That's good. And so we know that buying a home is one of the largest purchases and decisions that a citizen will make.
Yes, correct.
And so you want to just really help facilitate them into the process.
Yeah, because it's a fearful process if you don't know what you're doing.
Right.
And even with knowing what you're doing, you want to know who you're working with. You know, you want to know that the realtor or real estate agent that you're working with is involved in the community where you want to purchase. So it's a lot that goes along with that, with finding a mortgage company that works for you, because that's a lot of different products out there, you know, in reference to the first-time home buyer. So you want to know the percentage rate, the interest rate, mortgage insurance premium. So it's a process. So you want to just be guided, and that's what I do. My logo guided my clients step by step.
Good.
So that's what I do.
Well, now when you do the seminar, so when people come to it, is it like a 2-hour, 3-hour?
Well, I try to keep it short, you know, because I do know that I don't want to overwhelm them with too much information, but I give them all the basic point because, again, I'm going to guide them through the process, but I want them to know what the process is. So my time frame is like 1.5 hours.
Okay.
But that is extended if they have questions, and which they do. Okay. So I don't go over 2 hours.
Yeah.
Because I really respect my client time and value their client time.
Understand. Well, when you talk about buying a home and the information, I think you were telling me, you know, in our break that there are special programs, even special financing programs, and that's one of the reasons why they should come to the seminar. Yes,
there are. You know, of course, you know, you got the FHA, you know, 3.5% down. You got the veteran program, 100% financing. But also, you know, with certain banks, there is a program where they pay 100% and give you $4,500 towards closing costs, and there's no mortgage insurance premium. You can't beat that program now. That's an excellent program.
So you're saying that there are certain programs where the bank will pay 100%?
100%, yes.
Wow.
Yes. So
that means you don't have to put money down?
You don't have to put money down. But there are criteria to that. You know, you have to have a 620 credit score. You have to have 3 trade lines that's been good for 1 year. And what trade lines are, just credit that you have established. When you purchase a home, the mortgage company and the bank gonna look for your credit history. So you want to know, you want to have 3 trade lines. So that's a criteria, and the other criteria is the income. You can't make over $48,320 a year. Okay. But to that also it's called the low income area census tract. That can get kind of technical, but it all depends on what area that is. It doesn't matter about your income. They still will finance you 100%.
That's good.
So we just have to find that property that exists within that area, and that does apply.
That's good. Well, you know, I wanted to say that I learned a new word from Ms. Frazier. I thought it was just called credit, but the official term is
trade lines.
Okay. All right. Very good. Very good. Well, I like that word, trade lines. And so, You said that trade line is credit that is established for at least 12 months or a year.
Yeah. It could be established longer than that, but what the bank gonna look for is 12 months.
Okay.
So it's within that trade line, there you can have some negative trade lines also, but what they want is that positive trade line. So if you have not started yet, you want to make sure that you paying your bills on time. No missed payment, no delinquent 30 days. You want 3 positive trade lines for 1 year. That's key. And you want a credit score of 620 and above.
Well, now, when you talk about some people who have not been able to qualify, who've been going through a crisis, the economy, and they want to start from today, and they've got some negative things on their past history. And I know you help to counsel people through that.
Yeah.
So I heard you say that if they start from the day after they come to see you.
That's true. That is life. You know what? And that's one of the things that I really, really love about what I do. It's not just what I do, it's a passion, because I know life happens to everyone.
That's right.
So, a lot of people have had bad credit and have it now. But the key to having bad credit is replacing that with negative, with positive. You can't get rid of the negative, it is what it is, but you got to start from where you are.
That's good.
And so the very first thing is pull your credit report to see what is on your credit report card, because that's the first step. Doing nothing solves nothing. So it's going to be the same. So you want to pull your credit report to see where you are, and then we can start in the process of getting you to where you need to be.
Now, when you talk about pulling your credit report and starting from ground zero on pulling your credit report, for someone who just basic coming in doesn't know that they can pull their own credit report, they still can get started with you to show them
That's correct.
how to pull it up.
Yes, you can go to www.annualcreditreport.com. That's free. It's free, and you can pull your credit there. But what I like to do too is I like to connect with the mortgage company so that they can pull their credit report, and then they also see exactly what's there, and they put them on a path, like a guideline. Pay A, B, C, D, do this, and in about 6 months or a year, it all depends on what the situation is. That we're on a plan. You know what I'm saying? So if you don't feel comfortable with pulling your credit report yourself, get with me. Buy a consultation that's free. That I do for my clients. So to put them on that path. So with doing it through a mortgage company, they see where you are. They don't want to lend the money. They're going to guide you through the process of do this, and I can get you to where you need to be.
All right, well, so as far as the mortgage company and going to them about, establishing or pulling the credit report, some people have said that you go and you get qualified at the mortgage company first, then you see the realtor. What is your counsel for people who are going to come see you? Do you want them to come see you? You want them to go there first?
Well, I come see me first, and then once I know your situation, where you are, and then I can direct you to where you need to go. Now, if you have someone in mind that you want to use, I have no problem with that at all, because my goal is I'm not loyal to any mortgage company. I'm loyal to my clients.
That's good.
I want to make sure that they are getting the best interest rate and the best product for them. But the very first thing is, and I hear this a lot too from my clients, is I don't want to pull my credit because it would take a hit. If your credit score is bad, putting your credit to find out where you are, that's the best hit you can take. So you need to sacrifice that to see where you are, to get to where you need to be.
And so you're also, I guess, encouraging your clients on that there are 3 separate credit agencies.
It is.
That you can pull from.
It is.
Right.
It is. And then see, once you do it through a mortgage company, you won't have to do those separately.
Yeah.
Because they're going to pull all 3.
Okay.
They're going to see everything at once.
So now, if a mortgage company pulls your credit, does that show up as a hit on the credit score if the mortgage company does it?
Yeah, it's going to show. That required. Yeah, it is.
Okay.
It is. But like I say, you got to start somewhere.
Right.
And that's the best place to start.
Right.
You know what I'm saying? You don't want to start and try and take out a finance loan or anything like that. But to see where you are, you need to know where you are.
Now, do some of your clients, when they come to see you, do you encourage them after looking at their credit score to just devise a plan to pay down some of their debt? You talked about debt to income ratio.
Yeah. This is serious. This is critical.
Yeah.
One of the things, with FHA, they don't want your debt to income ratio over 45%.
Okay.
With the 100% financing through this particular bank that would pay $4,500 towards closing costs, the debt to income ratio not over 43%. So basically, all the debt to income ratio is the amount of money that you have coming in compared to the amount of debt that you have going out. So that can't be over 43 or 45%. And come into the office, give me a call. I'll work those numbers out for you to let you see exactly what you need to do. And also, when I find out that once I do that for them and show them what to do, they are more eager because they're like, okay, I didn't know it was this bad, or I didn't know it was this good. So it's a simple process, but that debt to income ratio is very critical. And also with that, another thing that I do want to talk about just briefly, student loan debt.
Okay.
Student loan debt, whether it's deferred or in forbearance, the bank and the mortgage company going to account 1% of that debt regardless.
Okay.
So before, you just changed like a little over a year. Before, if it was deferred, they didn't count that.
Right.
But now they count that. So if you got a $50,000 student loan debt out there and it's deferred, off the top of your debt income ratio, that's $500 debt.
Okay.
That they won't, that they will account for.
Understand.
So that is big.
Yeah.
You know.
Well, the student loan debt does not go away.
It does not go away. You know, it does not go away. And I seen that have hurt a lot of people because a lot of people have a lot of student loan debt, and you know, and you making $40,000 a year, and you got $80,000 student loan debt. That's $800 off the top.
Yeah.
You got a car payment of $400, a couple credit cards, $25 minimum.
Yeah.
You owe your debt to income ratio.
Yeah.
So you got to be very, very careful with that student loan.
Yeah.
And other debt. So if you know you got the student loan debt, just minimize the other debt until you get your home. Then once you get your home, you could do the other debt. But you want to really stay on top of that.
Excellent, excellent. Well, I'll tell you what, this is really great information. One of the other things that you wanted to make mention about people coming to see you is that you want to work with someone that you can trust.
You do. Yeah. You really do. And I'm not, for instance, one of my clients, she was referred to a loan officer to help her to purchase a home, and they gave her a quote of that she was qualified for $95,000. So she saw one of my videos, and then she gave me a call, and she said, Gloria, please help me. She said, I've been working so hard on my credit, and I know my income, my debt to income ratio, this does not sound right to me. And to make a long story short, I did her income, did her debt to income ratio, and she qualified for triple that amount.
Wow.
We are right now closing a home in Emerald Mountain.
Wow.
Now that loan officer said she only qualified for $95,000.
Wow.
So have she not, you know, had the intuition to call and just settle for that because she didn't know, and she referred to that loan officer, Quicken Loans, by a realtor. So, you know, it's not, you know, you got to know, work with someone that's been in the business that know what they know.
Excellent, excellent. Mrs. Frazier, we want to say thanks for coming to be with us.
Thank you so much.
We know that you've got to go because you got to close and that you got to leave out of here right now and go. So please call Gloria Frazier, Realtor with Keller Williams Realty. And that's going to do it for us on this segment of Vision. Please stay tuned. We'll be right back.